Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, October 7, 2009. We start with the euro-dollar pair, which after a three-session rally that peaked at the 1.4760 level, fell in today's trading, reversing about one-third of the recent upswing. Global stocks were generally weaker as traders took a pause from risk appetite, and the Eurozone released a weaker than expected GDP report. The euro-dollar pair, at today's low, was testing a line of resistance that may now have turned to support. In news from the Eurozone, the final version of second quarter GDP was revised lower as personal consumption, capital investment, and exports were all revised lower. On the plus side, government expenditure was revised higher. German factory orders rose 1.4% in August, a figure that was above expectations, though lower than the gains seen in July. The data does imply that Europe's largest economy continued to accelerate in the third quarter. The German economy has pulled out of recession on the back of government stimulus measures, which have helped boost consumer spending, especially on cars, while exports have also rebounded. With the euro weaker, the euro-pound pair fell in today's trading, also retracing part of its recent rally. Again, today's fall stalled at an old level of resistance near 0.92, which the pair broke above in yesterday's trading. The pound-dollar pair was consolidating for most of today's session, but after hitting the 1.5860 level, it rallied late, though still within the range we have seen recently. The rally in the pair corresponded with an attempt by U.S. stocks to rally from earlier losses. In data from the UK, the nationwide Consumer Confidence Index rose to 71, the highest it's been in a year and a half. The indexes for current conditions, future expectations, and willingness to spend were all up. The rise in sentiment reflects widespread reports from various industry commentators, recently suggesting that the worst of the recession is over, as well as positive news from the housing market and the strong rally seen in equity markets in recent months. Looking at the dollar-yen pair, we see a break below support at 88.60 that we took a look at yesterday. The pair's decline to the 88 level, where it found support and rallied to a downward sloping line of resistance. The rebound in the Greenback was attributed to a spurt of options-related and Middle Eastern dollar buying at the 88 level. The rebound in the Greenback extended to commodity currencies like the US dollar, Canadian dollar, which rallied from a one-year low near 1.0525. The rally may have been due following a 430 pip move in favor of the loonie since the middle of Friday's trading. The Aussie US dollar pair inched higher in today's trading, testing the 0.8950 level, but then turned back and fell to trade near its open. Today's action was less volatile compared to the last 5 sessions or so, but the Aussie is holding on to its gains following the surprise interest rate increase from the country's central bank. Tonight, Australia is set to release its employment figures for September, which could be a catalyst for a move in the pair. Overnight, Japan will post data on machinery orders and its Eco Watcher survey. The UK will post a measure of leading indicators, while Germany posts its industrial production figures for August. Early tomorrow morning, both the European Central Bank and the Bank of England will conclude their interest rate meetings. Traders will be watching carefully for what both will have to say as the economies emerge from recession. The US, meanwhile, will post data on weekly jobless claims and its wholesale inventories, while Canada will release data on housing starts. And that will do it for today's broadcast. Thank you for joining us here at CMSFX.com, and happy trading.